Tesla coming in as expected, 462,890 vehicles.
This is a company that, is priced as a growth stock that is having trouble growing.
Energy storage. People are finally talking about this.
While they're expected to announce a robo-taxi venture, I don't think that that's going to be enough to really meaningfully move the needle.
We're still in the transition period. I think this is an important quarter, the September quarter, because we finally returned to growth after 6 months of declining deliveries.
All that and more. So let's get to it. Tesla announced its third quarter 2024 production and deliveries numbers, producing approximately 470,000 vehicles and delivered approximately 463,000. A little bit below my estimate of 465,000, but I'm sure it'll do. Tesla also deployed nearly 7 gigawatt hours of energy storage products compared to last quarter, which was around about 9.5. So all in all, about within expectations. Of course, the Model 3 and the Model Y are the majority of all the production and deliveries, but this other models row, that's going to draw quite a bit of attention considering it includes the Cybertruck S and X. While this is a huge indicator on how Tesla's Q3 has gone, we're gonna have to wait until October 23rd to get the full picture. The margin story. How likely is it that they're going to grow production and deliveries year over year? And more than likely, some clarity after the 10/10 event. Needless to say, the stock has been slumping in the month of October. It's only been a couple of days, down a little over 1.25% in the pre-market, currently sitting at $245.71. Let's hear what the financial news media had to say about this development.
But this is the number that people were expecting, 462,890, producing 470,000 vehicles in the fourth quarter, or excuse me, in the third quarter. And we also have the date for when Tesla will report its Q3 numbers, which is on the 23rd after the bell. So again, Tesla coming in as expected, 462,890 vehicles, just a smidge more than the street was expecting. Guys, I'll send it back to you.
Hey, Phil, I'm going to bring you into the conversation we were just having because Jim was bringing up the idea, at what point does the increasing number of EVs actually start to affect the demand for gasoline? I don't know when we get to that point. I mean, we're still very low percentages, aren't we, in terms of ownership worldwide?
We're not there,
We're
David.
not, right? Yeah.
Yeah, worldwide, I mean, you definitely are seeing the growth in China certainly impacting the demand for ICE vehicles in that market, which is the largest market in the world in terms of vehicle sales. But we're not seeing it definitely here in the United States. In terms of vehicles sold, it's going to be about 9% relative to the rest of the market. ICE is still about 79, 80%, and then hybrids coming in at about 11 or 12%. So you're seeing the slow erosion in the ICE market, but definitely not to the point where you can say EVs are telling people, look, you don't need to buy an ICE vehicle, and therefore gasoline demand is dropping.
Hey, slow erosion. Well, I don't need nobody to tell me not to ever buy an internal combustion engine vehicle again. I'm never going back. And just imagine when the United States is able to get to that EV adoption rate that China is in, that Europe is in even, because you best believe it. It's going to happen. It is on that path. It may not be material as of right now, but let's give it a few years and see what we're talking about then.
Going into the data, it's interesting because 3 and Y, the volume products, beat estimates. The other bucket, which is X, S, and Cybertruck, missed estimates. What else do we know?
Yeah, I think this is a case of, a narrow beat giveth and a narrow miss taketh away. This is a company that, its shares are known to be quite volatile. Just a quarter ago, they just barely exceeded expectations and the stock went kind of crazy. I don't think we necessarily learn a ton from these numbers. I think, we do generally see a nice upward trend both sequentially and year over year. Having said that, if you kind of, pan out a little bit and look at the trend, going a little further back, we really just see a sort of general kind of flattening and lack of growth from this company. On a year-to-date basis, we may actually see a decline if trends hold up. We've seen them drop a little over 2% for the year. So this is a company that is priced as a growth stock that is having trouble growing.
So many factors go into why Tesla isn't growing nearly as much as they were in the past. A lack of demand at this current price point, Chinese competition, the lack of growth here in the United States when it comes to EV adoption, all of that kinda plays a tiny part. But what I think these analysts failed to realize is that this is the best battery electric vehicle on the market. Not only from a functionality standpoint for the consumer, but from a manufacturing standpoint as well. When it comes to making money off of battery electric vehicles, nobody does it quite like Tesla. In fact, Tesla plans to introduce a new production style to further improve on this cost. As they say, it is indeed a game of pennies. Saving a penny here, saving a penny there could be the difference between 7 and 15% margin. This unboxed method that they introduced at Tesla's last Master Plan Part 3 event, it's simply not quite ready just yet. Coupled with that, the breakthroughs in artificial intelligence, Tesla's going to have to try to take advantage of that at every step of the way. If that means production suffers in the meantime, so be it. It's just gonna blow people's hair back when Tesla starts growing in volumes of vehicles while they're growing in multiple areas of revenue growth. Something tells me in the next few years, TSLA is gonna get a little nutty.
Tesla reporting third quarter deliveries today, just under 463,000 and up about 6% year over year. This coming against the backdrop of an auto industry that has been struggling. We've seen sales reports from Ford, General Motors, and Stellantis all come in weak as well, not to mention a bunch of European automakers cutting their forecasts. Let's talk about Tesla first of all here, because these deliveries were kind of meh, right? But does it even matter? Is everybody just waiting for the robotaxi?
Yeah, I don't actually think it matters. Frankly, I thought they were kind of boring. They came in really in line.
You don't say that about Tesla very often.
Yeah, I mean, this is pretty well telegraphed. We knew the July and August numbers for all the countries. We're missing September. We had the China insurance numbers. We knew Europe would be bad because of tariffs, etc. So the US was the missing piece of it. We knew they cut pricing, but didn't expect the quote unquote whisper number to be as high as it was. For the stock to be down 3.5%, what is that, like $30 billion on something like this seems kind of odd. I think most folks are just trading into the robotaxi event. They already traded up into it. Maybe there's some profit taking. I think that's what's happening.
Do you think, Tom, they Musk can hit that full delivery consensus for the year, full year?
Maybe not. I still forecast it coming down year over year, but consensus is also down. But I think that's less kind of important. Car business for me is less, like 5% of my valuation, right? They need to sell cars to sell FSD and everything else. But I think folks are going to start looking at the bottom line more on gross profit. You're going to have regulatory credits, which surprised a lot of people last quarter. It's going to be good this quarter again and next year. And energy storage. People are finally talking about this. We saw the number that they printed today. It wasn't as good as last quarter, but way bigger than the run rate of last year. So I think folks are going to stop looking at the delivery numbers so carefully and start looking at gross profit, and it's going to look pretty good.
Mark my words, Tesla will be positive year over year when it comes to the car side of the business. But Tom is absolutely right, though. That energy deployments number, I expected that to be way lower, like by 2 gigawatt hours lower. And we're fast approaching a moment in time where we're going to be talking about Tesla's deferred revenue when it comes to FSD. Making cars is important, and they will do that in spades. But more importantly, we've got to get this FSD software on point and feature complete. You got to remember, all of the auto industry is struggling mightily. Tesla is making money hand over fist, and they've got so many things coming down the pipeline. Robotaxi. We got the Q3 earnings report. Tesla AI team put out a roadmap for FSD. We haven't seen Optimus in months. Tesla is more than just a car company.
Tesla, which had its first rise in quarterly deliveries this year, certainly wasn't enough to boost the stock today. It's down 3.5%. What are you thinking?
Yeah, this is really interesting. And let's go through the fundamentals and then I'll describe why I'm short-term bearish on Tesla and why I'm going to put on a bearish option trade. As you pointed out, deliveries actually rebounded 463,000 vehicles in the quarter, 6.4% over what they had done in the quarter of a year ago. But that's a little bit less than was expected. And the company has other problems. Americans seem to be souring on EVs to a certain degree, or at least souring versus where we stood 2 years ago.
That is true. I wonder what it's going to look like in the next 2 years, though.
The company has just brutal competition coming out of China. And while they're expected to announce a robo-taxi venture, I don't think that that's going to be enough to really meaningfully move the needle, given where robo-taxis are operating now, and it's not a very big part of the country. So I am short-term bearish, but the way to be bearish in Tesla and to define our risk is to buy a put spread.
He's not wrong. The 1010 event is probably going to be misunderstood by many. And when you're talking about what's going to happen on October 23rd, the margins will be an interesting topic. Will they be worse than Q2 of 2024? If they are, you could probably expect TSLA to take a steep decline. Look, it won't shock me if Tesla falls 20% in the month of October. It's always a terrible month. After we get past this scary month of October, it's going to be open season on Tesla's growth story.
You think another model will be announced?
I do, Melissa. I actually think there'll be 3 models. That cheaper model that we're just talking about, I think that they'll have a robo van, we'll call that something that's way off, and then of course the robo taxi. So I'm going to this thinking we'll have 3 models. I do agree with Phil that next week is going to probably be light on details. If you just look at the setup of the event, the number of people that will be there, this is not analysts and investors with their laptops. This is essentially a launch party. And so you can imagine Elon getting up there, talking in kind of very high level and not giving much substance around details. The one detail that I'm going to be hyper focused on is that cheaper $25,000 car when they expect to ramp production. And I just want to kind of put one thread through why this is important for next year, is that the street's looking for growth to go from essentially 7% in the most recent quarter to 12% next year. To get to that 12%, you essentially need to have that cheaper model starting to ramp in the middle of the year. If you look at historically, the gap between when they announce a vehicle to when it actually becomes available would suggest it's going to be late in 25 or early 26. And so we could be shaping up for a little bit of an air pocket, still believe we're going to get back to growth, but I think investors should have their their eyes clearly on the timing of this new vehicle because it's going to impact delivery growth next year.
3 new vehicles? I guess that would be in line with the Robot story, but many analysts, Gina included, are kind of focused on the wrong thing here. Having FSD work on these vehicles is paramount. Tesla just put FSD on the Cybertruck, which is probably an incredible feat. But I'd imagine they're going to want to put FSD also on the Tesla Semi. So if we've got 3 new vehicles, 3 different sizes, 3 different shapes, all of them potentially being able to work with FSD, says a whole lot about the licensing capability of this software. And that's gonna be a pretty penny if you ask me. Don't get me wrong, Tesla's still going to be the largest producer of battery electric vehicles, hands down. But their revenue streams are going to be plentiful to say the least. This cheaper $25,000 vehicle that everyone seems to be so enraptured by will indeed open up the total addressable market, but the main focus is making sure that FSD becomes feature complete and is functional on a variety of vehicle sizes.
Again, around gross margins, 14.6 is a number I see being talked about. What do they have to do to get the street excited that you're not conceding this erosion? And is there any expectation that that could be a surprise?
We're still in the transition period. I think this is an important quarter, the September quarter, because we finally returned to growth after 6 months of declining deliveries. So that's an important part. And I think that that lays the groundwork for us to have some improving margins. But as long as they kind of stay stable, I think it will give investors, of course, Tesla investors are notorious for having a long-term view. And if they can keep that stable right around that 14, 15%, and keep some optimism around these products coming out mid to late next year, I think that that's enough. If that margin declines, then of course it's going to be a whole different conversation around the stock.
In conclusion, Gene's right. Most Tesla investors are long-term investors. They could give a damn about what the Q3 numbers look like, as long as Tesla, the company, is continuing down the path of being the most valuable company in a decade's time. What does that look like? That looks like Tesla's producing the most battery electric vehicles on the planet. That looks like FSD inching closer to becoming feature complete. That looks like Optimus continuing to expand in what its capabilities are and overall understanding of the real world. Tesla, the company, is just getting started. And the reason why I'm invested in this company long term is that TSLA will eventually catch up to Tesla, the company's aspirations. And it comes down to execution. Now, granted, Tesla has been trying to accomplish things that were deemed impossible, which can lead to some delayed timelines. But their track record has been clear. Their ability to achieve the impossible is on record. So for me, FSD, Optimus, this isn't a matter of if, only when. That's all I've got for you today. Be easy. Peace.